Welcome back. You're watching us here on Chartbusters. Let's talk about the primary market now. RK Swamy, the company's 424 crore rupee IPO opens for subscription today, closes on the 6th March. We have Narasimhan Krishnaswamy, who's the Group CEO and whole-time director, along with Rajeev Newar, who is the Group CFO, joining us to discuss the business prospects of the company in detail. Of course, it is a digital marketing service company, has clients across all verticals, and 44% of their revenues come in from integrated marketing communications. Thanks a lot, gentlemen, for joining in, and welcome to the stock markets, as it were. I'm looking at your issue size. 424 crores is the total issue size, of which fresh issue is 173 crores, OFS is 251 crores. For a service company, how does it make sense for you to, raise fresh issue? Mainly because a lot of it that your objects of the issue are for, you can fund that with your own cash flow from operations already. So just wanted to understand that point here.
Good question. We have funded our business for 50 years.
Yes.
So you can say we have bootstrapped it. But there comes a time, I think, in the journey of any company, when you look at the market, you look at the environment, you look at the opportunities, and then you say, look, we need a reset. And we need to accelerate where we are. The market is too exciting for us not to pay attention to it. Everybody knows the story of India. There are now states competing to be trillion-dollar economies at a state level. So the opportunities are significant. So if you look at the initiatives we have in place to grow digital content at scale, to create an RK Swamy Center for Study of Indian Markets, to create an RK Swamy brand and marketing consulting group, to create a consumer data mart, to create an auto marketing platform. All these initiatives are new, different, innovative, even if I say so, and very relevant for where the country is headed. So to do this, it requires an infusion of capital. Yes, we can do it on our own, but then it'll be sequential. It'll not be concurrent. And if you want to do concurrent initiatives and step up and do reset the company, we are a 50-year-old business. So if you want to be a 50-year-old startup, then I think a certain infusion, it's not a lot of money in any case. So it's a modest amount of money, and the objects are clear. And it is absolutely necessary for us to recalibrate and, move this to the legitimately the next level that we can aspire for.
Okay, all right. Good morning and good to see you all in, gentlemen. And we've taken your point on both, sir. Since you believe it's a big opportunity, and in the last 3 years, if I look at it, you've grown by roughly around 30% on a CAGR basis. So can you maintain this sort of a growth momentum, point number one? And is there a seasonality attached to your margins? Because they used to be in early teens, then last year they went to late teens, and for the first half of the year, they're back in that 13% odd band. Okay. So explain that to us, why is such a big fluctuation in margins?
I'll leave the margins to Rajeev. Let's talk about, we are constrained by what we can speak in terms of future growth and so on and so forth. But the initiatives are very clear. I think our growth is going to come from where? Last year we had 475 clients. Our clients are growing. So there will be, given the fact there will be some attrition, our clients are still growing. So there will be growth coming from our existing clients. We always have a pipeline of new business. So there is something that will happen on that. And it's a historical fact. The facts are there in the book. We also have new initiatives in terms of geographic expansion. So that will kick in. And we have these new initiatives that I just talked about. So the aggregation of growth, whatever that percentage is, and it's impossible for me to put a number, and we don't want to put a number. But these are the growth drivers inherent in the business. Our clients are our primary growth drivers. And the focus we have on our clients is our reason to exist. We add value to them. We say that in our presentations, we say we strive for delivering disproportionately positive results.
Yes.
If we can continue to deliver disproportionately positive results, that is a reason to engage deeper with our clients.
Got it.
I'll request Rajeev to
we'll let you go at that, sir, because it's pre-IPO, but on listing, we're going to push we'll push you for a number over there. But tell us about the margins, the big fluctuation that we have seen, and if you could give us a broad band, Rajeev.
So if you look at our revenue, the revenue has been growing at a certain pace, as you rightly said, over the last couple of years. Now, the interesting number that you will see is that the gross margin in this business is close to about 68%. So gross margin is nothing but revenue from operation less the variable costs. And even if you look for 23 or if you look at fiscal 22, it's about 68% gross margin. Now, the costs which go below that are basically people costs and establishment costs. Now, in a manner of speaking, they are fixed in nature. Obviously, they will grow over a period, but in a manner of speaking, they're fixed in nature during a period. Okay? So, and almost 40% of our revenue historically have come in the first half, and 60% of the revenue typically come in the second half. Now, it's simple maths. If you apply the gross margin percentage, you prorate the fixed cost, you will realize that the margins typically would be better in the second half. Historically, that's what we have seen.
All right, I'm just doing some numbers quickly out here. You said that 40% revenues come in the first half of this year. That implies that this year at least you will do about 350 crores on the top line. And if we were to project this 30% CAGR over the next 3 years as well,
That's
then
your
maybe
projection,
that's our projection entirely.
We are going according to
just
mathematics,
putting the
sir.
numbers. We're going purely by the laws of math. I just had two quick questions. The first one is with regards to all these things that you're doing. The first half of this year, your cash flow from operations has been negative 35 crores. 87 crores of the object of your issue goes into working capital requirements. So, just wanted to know about the payment cycles out here. When does your cash flow from operations turns positive? Is there seasonality? And the second one, with all these things that you're, setting up concurrently, like you spoke about, how closer does it get you to, accelerating your revenue further from what it is? I mean, I'm sure a lot of your competitors would be giving the same services that you are, right?
So first, let's address the cash flow issue. I'll address it conceptually. Rajeev can give you the details. 40-60 is the first half, second half historically. Cash flow is a ebb and flow based on the business that you clock. So I think that in itself tells you what the requirements of the working capital are and why that also ebbs and flows. Specific numbers he will give you.
So very clearly, if you look at the working capital, basically the need for working capital increases in the first half of the year and obviously ebbs in the second half of the year. For example, if you look at the balance sheet of 2023, okay, end of the year, the net working capital was almost nil. Okay, the receivables and payables almost even out. Okay, so that's one. It's also important for us to actually just go back and talk a little more on the objects of the issue, because that's a question that you raised. We are spending that 173 crores basically in 4 initiatives. The first initiative is basically is on setting up a digital video studio that will enable us to create more and more videos for our clients, which we can place across media platforms on behalf of the clients. That's one. The second thing is, if you look at the analytics business and the research business, they have also grown over time. Now, very clearly, we need to beef up our internal capabilities there. Okay, so that's one space where we are doubling our capacity, marketing infrastructure, that is. The third is, in this business, talent is important, and so is technology. So the third spend that we are having is towards technology. Okay, so technology refresh, which we also believe will also help us to improve our operational efficiency. That's number 3. And the fourth is working capital. You see, there are a couple of initiatives. In fact, Shekhar, in his earlier part of the conversation, outlined a couple of new initiatives. So this working capital will also enable us to pursue some of those business initiatives that we have outlined in the RHP.
All right, gentlemen, thank you so much for joining in and giving us conceptually what the future of the business looks like post this IPO. But I'm sure Nigel and I will press you a lot more for these numbers.
On listing.
On
Please
growth,
press us.
etc. going forward.
Okay.
Thank you so much.
Thank you so much for joining us.
You're welcome.
Thank you so much. Thank you.
Right.